Hi, welcome to the Market Alert for Thursday, the 11th of June 2020. So yesterday, chaos is coming. Too right it is. Bullion, bonds and big tech, Nasdaq, were bid higher as the dollar and the Dow dumped. And this is going to continue. Looks like the weakness that we spoke of a few days ago is now starting to take effect. And this is down to yesterday. Powell, Fed will never hold back support for the economy, even if asset prices are too high. So now we've entered the twilight zone. The Fed has fully embraced the bubble. Well, they've done that for the last 12 years, but now the insanity continues. So that was the main thing yesterday from Powell. Again, the usual rhetoric, we will do whatever it takes. Whatever it takes, we will do. And there's another chart that I wanted to get to, and that's the total US debt. As you can see, it's gone parabolic. And as it says down here, in light of the unprecedented helicopter paradrop of debt, something tells us that the Fed schedule released today of monetizing only 80 billion in treasuries each month, or about 1 trillion per year, will not be sufficient. Of course it won't, because if you're going to throw everything and the kitchen sink at the markets and support the asset bubbles, then that's what's going to happen. I mean, there's a bit of an irony with all of this COVID stuff, because the hysteria surrounding the virus is incredible, and the reporting of numbers are highly suspicious. But when it comes to the economy, they're not reporting the correct figures. You couldn't make this stuff up. You really couldn't. And in particular in the UK, which I mentioned the other day, which I'm sort of struggling with, is that house price falls, or figures, rises and falls, are not going to be reported for the next 3 months by the Office for Lying Statistics, which I find most odd until you actually think about it, that most people's homes or houses are a cash machine. So the less is reported, the better. But yeah, we live in some really strange times with regards to what's going on. That's for sure. Let's start off with the Dow Daily. And we've got an interesting point in the chart here today, and that is that prices are approaching the 200 MA. Close below here, we are likely to head south and have a retest for sure. I mean, now the reality is kicking in. The honeymoon period's over. As furlough will come to a close, business is not reopening. There is a reality check coming from the euphoria that we've seen here, where the market's retraced 78% or just over, or 80% of its down move that was experienced in February, which you can see there. So it's not looking good for the Dow at the moment. Considering the Nasdaq has gone back to the all-time highs, the Dow is struggling. And yesterday, we saw the market drop in the main session from the open in anticipation that they could bring the market back before Powell. And not only that, but as I've mentioned dozens of times now in the Market Alert, that you can bring the futures up in the pre-market session, but when it comes to the big boys getting out and the retail sales coming in from the sheeple, then thinking that everything is going to return to normal, there is no normal anymore. Then they sell, and then they test, as they always do, bring the market back, and we come right back to the DP and the 200 MA. We then get a bit of a double top retracement. We get the signal there that there is some selling in the market. Prices fall and continue to do so until the market closes. And this weakness has continued overnight, as we've seen in the daily chart. We're below both the 200, which you can see there, and the DP. As I just slide the chart across to the left there. At the moment, there's a bit of support coming in, but we've had these supports in the down move overnight, and they've not held. So any bounce for me today will be the opportunity to short, whether it's the DAX or the Dow, as prices do look, and are starting to look very weak indeed. Let's have a look at the German DAX, and we'll start off with the daily chart. It too is approaching the 200 MA, close below here. We'll see prices move lower, and for some unknown reason I have the fibs missing, so from the high to the low there. Again, you can see between the 89, 78, back below the 78, watch the 200, below the 5 bar moving average as well. So expect to see further selling in this market. Let's have a look at a bigger picture of the German DAX with the 15-minute chart for yesterday. You can see that prices were waiting for the Fed. There was a couple of moves to the upside there, and if we have a look from the low of here to the high, just take out extend right. As we're looking back, you will see prices retrace to the 89% area there, and before this happened as well, we've got the high to the low there. Again, you'll see prices retrace, and the same, and the high to the low, you'll see prices retrace. You've got a BRN there as well, and you've got red in the volume. And then prices traded sideways until Powell spoke, and it too then moved to the downside. And overnight, again, you can see prices moving lower, finding a bit of buying support at the moment. But then it too has tried to hold, but it's failing at the moment to close below the 5 bar, above the 5 bar moving average. In the 2-minute chart, which is one I favor for scalping, again, you can see yesterday the market opened, prices rallied, and then they failed, moved lower, came back to the 200 MA, and then prices moving lower following the signal and continuing down 100 points, 150 points to be precise, as prices continue down on the overnight. Again, you can see these little clusters of green where you get the bounce, and then prices moving back, and that was yesterday lunchtime. I'm getting carried away with overnight markets here. And then back through the 200 MA as lunchtime approached. There was some economic news, and then in the afternoon prices moving lower once more. 3 signals there, 2 winners, 1 loser. So 4 trades, 1 loser yesterday. And then Powell on the overnight, don't trade the DAX past 4:30 p.m. unless you've got a brokerage firm that doesn't widen the spreads after the market closes at 4:30, which I don't know of any, unless you're trading the futures contract, of course. So at the moment, the market putting in a bit of support there, but you can see that it's not holding at the moment. I suspect we may get a bit of a rally to begin with to try and bring things back before then we move to the downside later this morning. And meanwhile, in the implied volatility, this too is also picking up. We've got a close above the 20 bar moving average, which is also adding to downward pressure on the Dow, which you can see there. We've got an amber now in the Dow. Price is still above the 20 bar moving average, which you can see. But the first sign of weakness coming into this market is definitely the close above the the close above the 20 bar moving average there. So a bit of an amber warning there in the Dow. Okay, that will do it for this one. If there is anything else to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.